there's so much going on since the last time we spoke. What do you think right now is the biggest issue facing the equities? Or the U.S. economy in general?
Well, there's a lot of issues facing it. I think that I don't know when the last time I was on with you guys, but I said, you don't fade, but you watch the dollar rally was getting, maybe when the dollar was actually on its highs on the index about 114, I think was, I don't know, I think we did one, but I don't fight things, and there were other things that I was watching closely, but the United States going its own separate way, basically. Now, yeah, everybody's raising rates, but the United States is raising rates, and of the big central banks. I mean, Bank of England is squishing its balance sheet, as are a few others, but the ECB has certainly not moved to limit its balance sheet, because to do so would, I think, bring great existential questions. Well, they're there anyway, but it would lead to some fragmentation in the European debt markets, which would really cause Christine Lagarde some very, 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 very serious issues, which she's trying to avoid. So I think the ECB is willing to raise rates, even though, as I say, so where are we at 2%, I think. So if we go to under deposit rates, so if they go to 3%, 3.5%, with inflation at 7, 8, 9%, I don't know, whatever the measure you want to use, you're still significantly, and again, my emphasis is on real yields on overnight rates.
Yeah.
It's a very important thing for me, if you're really trying to break the back of inflation. So they're nowhere near that. And I don't think, there was some discussions out today, there were a few articles. Let's see, I can look at them right now. Future decision, from Desquaux, from Villeroy, everybody, the ECB has a very difficult task, and Christine Lagarde, therefore, a very difficult task. But her task borders on, existential for them. So she has to be very careful. But just raising rates, and we see the impact it had, of course, on the dollar, which pushed the dollar higher and higher and higher. And a lot of that, everybody starts looking for the underlying fundamentals. And I kind of laugh, to tell you the truth, because what underlying fundamentals are you looking for? It's not that. Part of the fundamentals, and people don't understand, seem not to understand this. I did a podcast yesterday, and we talked a lot about with this guy, Victor Adair, but a fundamental is if everybody is borrowed in dollars, which is what my concern was for a long time, but certainly even before the Fed started to get aggressive raising, the world, because of the Fed policies, has been borrowed to the max in dollars. Well, if the dollar is going up 15, 16%, interest rates are rising at the same time, your cost of sustaining that debt is rising dramatically. Well, that's a fundamental. That's a fundamental. And that was driving the market higher. And even Larry Summers picked up on the argument that I was making, that the best paradigm to look at was what happened with the Swiss franc in 2015. I think I said it several times with you guys. That's the paradigm. And you know what? It was, and it ran the dollar up. Now, are the dollar's fundamentals this good? Not a chance in the goddamn world. And if you want to tell me that they are, well, then keep buying dollars. But I'm telling you, we are getting to an inflection point. And that's the key. Right now, interestingly, we've had some positions unwind. Okay, I would say that unequivocally. That's what I think drove the dollar up most recently. I mean, I'm sorry, drove the dollar down as people were unwinding some of their long dollar positions, the speculative positions. Because the interesting inflection point for me was, and I was in Judd's room on November 4th, I was actually in Florida. I think you and I had talked the day before. Maybe I did the Rosenberg Book Fire podcast, which if you don't have it, I promote my podcast because I'm not doing much writing, but the podcasts are I think, really good. Because then after that, I did one with Brent Johnson on the following Monday when I was back in Arizona. So, which is also very good. So if you don't have them, let me know.
Yeah, we
but
posted.
in both of those, I talked quite a bit, and I disagree with Rosenberg because I thought the dollar was going to have some issues. But right now, you're just getting unwinding some of the speculative dollar long positions because those were too much too fast, and you had a huge move for the year, and the yen really was the problem. Brent Johnson talks about that quite a bit, and it led to a very, very good discussion we had about Asia. But there's a lot of things, as you point out, going on. A huge amount. Look at today. I'm glad I'm out with you. The 210 is making, I don't know, 40-year highs today.
Yeah.
Or lows, depending upon how you want to look at it. Yeah, there's lots of, Matt, you're 100, lots of stuff going on here. And it's not easy stuff because there's a lot of cross currents. But the world was certainly getting concerned about the strength of the dollar. And I don't care when people, I do care because it affects markets. I don't care from an academic standpoint when they talk about that, well, the strong dollar is good for US inflation. I challenge you to tell me how that is. Now,
Hey.
I believe it will be at some point if the dollar rallies strong enough, because the world will go into a major, major recession / disinflation, as everybody needs to start raising more dollars to cover their dollar deficits by dumping goods on the world. Yeah, but if you want to get there, be prepared to find out what all this, sorry, I have to go back. What all this leveraging has done to the system. And you're going to find out, as Jimmy Bianco loves to say, we're going to go until they break, until the Fed will go until something breaks. I don't think you want to do that because, again, you don't know what's going to break. There's so much risk in the global system, so much risk that when something breaks, it may be so catastrophic that you don't want to push the system to that. But right now, I'm a standalone, so I will stand alone. But again, it's all about trading. It's not
Right.
about who's right. I know I'll be right over X amount of time. I can't tell you the time period, and nor can anybody else. I've learned that. That's why I bother and spend so much time with technicals and people who do technical analysis, and just to get my timing, because good timing means less risk.
Well, we trade to make money, not to be right.
Exactly. Yeah, exactly. You want to trade to be right, go get your fucking Twitter account and bang yourself and applaud yourself. And you may as well get a TikTok account at the same time, and stick your head up Xi's ass and give everybody all you can, all the data that they can possibly accumulate about as many people as possible, and then spew it back at you and you're all geniuses. Go ahead. You know what? And I'm not a Luddite, because believe me, I live on the internet. Google is a mainstay of my existence for 25 years for sure, because its ability to, in a very quick, methodical way, find things and verify things and double check things that I've thought about, or if I have a hint in my head about them, I'm able to actually go find. So I love the power of the internet. I don't love the power of all the platforms that come out though. So I don't know. And I'm not crying over spilled milk because my life is very filled, and materially I've done very well. But I do, everybody gets out there and it starts pounding on certain things, and that doesn't make you right. It doesn't make you right. 600,000 followers doesn't make you right, by the way.
No, it does not.
Hey, Ira, Jake here. And I'm kind of glad you're starting with the dollar today, because I've been banging my head against the wall a little bit with with the dollar had been higher here a week or so ago, and then when it started falling off, a lot of the commodities are falling with it, and which to me is kind of counter what it normally does. And I just kind of was wanting your thoughts on that. I caught the podcast with Rosenberg there too. I think I listened to that yesterday, but
Yeah.
you know how he talked about the bonds got a bottom first. Well, did they already? You know,
Well, Jake, I'm glad you bring that up because, Dave and I disagreed about that. And that's his old, and believe me, it's good to disagree. And I love, and he was so gracious at the beginning. I mean, if my mother was alive, she'd be crying, because he was very nice in his views on Peter and I. But see, I don't believe that because I think the market right now has changed dramatically. And yes, for 40 years of my life, I would say that. But with what's going on with QE, and it's just not with the Fed, it's with all the other central banks on top of it, you have such massive amounts of liquidity and huge balance sheets that I don't know that I would say that anymore. Because I think that debt is going to be a damn drag, by the way. Because I think the bond vigilantes, for lack of a better phrase, but Yardini seems to talk about them too, are resurrecting themselves and circling for an attack. And that's what you saw, by the way, in Britain. It was the bond vigilantes who looked at the policy and did exactly what they were supposed to do, attack the bond market going, you're out of your friggin' mind. You can't pursue this policy without driving rates. And not short-term rates. You always discern between short-term rates and long-term rates because they're different. The only way that the Fed can control the game of inflation is through short-term rates. The long end of the curve going out from 2 to 30 years will, when markets work right, signal to the Fed that they're doing it right. That's what it signals, that they're getting it right. Okay, you've now, that's why when we talk about being ahead of the curve, behind the curve, but now everybody's looking and they think, why would I as long as we've opened up this conversation, let's get right at it. And I did with Rosenberg too. Okay, so the Fed's successful. Let's say they raise Fed funds rate to 5%, but inflation is still at 6 or 7. So we've never gone to, so we haven't gotten to real positive yields.
right? Because they're still real negative.
We're still real negative. And before I did those podcasts, I actually did a really good podcast. I have to say that. I say that because when I go back and listen to them, I go, oh, this really should have value to traders. But I did one with Julian Bridgen. I don't know if anybody listened. That was really good. And Julian Bridgen and I talked about this real interest rate. And Bridgen has looked at this. And right now, right before, 2 months, when I think we did it about 6 weeks ago, maybe a little less than that.
Was it on the FRA?
Yeah, it's on FRA, and I advise. That's really good, Julian. And yeah. I didn't know Julian Bridgen. He came to FRA. I don't ask for these, by the way. These come from people who ask. They say, we've seen you wanted to see if we can do a podcast, and I say that with great respect. And Richard Manuglia has really done a great job with this. But he'll call me and say, oh, so-and-so. Like tomorrow I'm doing with Eric Peters, who I love. Eric and I actually talk at times.
They're great. The thing about it is, it seems like I have to listen to them a couple times and I come back with things I missed, the first time. I always catch something new the second time around.
Hey, Jake, yeah. Some of them I listened to 3 times because I have to go and find out, well, why should these be relevant? I'm my harshest critic. Because I go, why should this be relevant? Is there anything relevant here?
It's all relevant.
Well, it's, sometimes you get, but see, I like them because they're really high profile people, but with Bridgen, and Bridgen had done a study going back to 1956, looking at real yields. And right now we are at historic negative real yields when you look at it. We were, prior to the advent of the rates going up, the last 2 raises, I think he said we were at like 5.75 negative real yields. Well, that's my whole point. And mark this down. And you know this group knows this because we did this in real time, Maddie, with 2018. 2018, from July of 2018 through the end of 2018, right before the famous Powell pivot, we discussed this in real time. And on July 7th or 9th, I was on with Santelli because I can grab the hit back. But Santelli and I were talking about that the Fed was, we were applauding Powell finally that he was, raising rates and they were shrinking the balance sheet. But Santelli and I talked about it in real time, saying, but he's got to stop raising rates and just start shrinking the balance sheet. It's all going to be too much, which it turned out to be, and what Druckenmiller famously called, the double shotgun approach, which was a failure. And Druckenmiller said that in December of 2018. But as Julian Bridgen talks about, in 2018, and I brought it, we had a full discussion on that. By October, November of 2018, real yields on Fed funds got to, as Julian said, and you could see that he had measured out, because I said 1%, he said 90 basis points. He didn't miss a beat. So he's been watching it too. And because that's what, and you remember what the last quarter of 2018 looked like?
Oh, I do.
Okay. Yes, we do. And we were talking about it because we were talking about how the all-weather people from Bridgewater to others were getting their asses kicked. Bonds were just like now, just like this year. Bonds were down, and not just down. They were getting whacked. And the curve had gone from being a little negative to actually steepening out, which is, I'm looking for this to happen. But everybody is now riding the Rosenberg wave, the coming recession. So, but why would you buy a 10-year note here? I still struggle when I can get 63 basis points extra on a 2-year note. Because if that is right, the Fed is at some point going to have to panic. They will not stay the course because the amount of debt that has to be paid is too high. You take out this measure. I don't know. Just because the CNBC doesn't talk about it doesn't mean that it doesn't have relevance. And that's the battle that I fight. And it's not a battle because go do what you want. You know what? As my dear friend Lenny Feldman would say, I think it was an Italian phrase, "Cade cade asta spitz," or maybe it's Greek. Run as fast as you can. I'll still be here. The things are not going to change unless, again, until something dramatic takes place. But go ahead. You're buying 10-year. Why? You think that the world is going to break down so fast because the only reason you want to buy that type of duration is you think the capital gain will be huge, right? Because the world is going to fall on its knees so quickly. Okay. I just don't see that, because if that started to happen, I think the Fed would panic, and I'm not sure that the 10s will go anywhere. So maybe the curve steepens to a positive 200. I don't know. And nobody else knows either. There are a lot of people pretending that they know and a lot of I just don't know. So I'd rather make a bet on the shorter end of the curve because I get paid more to make that bet. Yes, I'm giving up some potential positive capital gains. Just like, how much is here? I got to look at it. So give me a second. I'm going to put up TLT just because it's a stupid measure, but it'll to expedite the discussion. All right. So
when it comes down to it, I'm sorry. I was just going to say, when it comes down to it, the government's going to be the one that's got the biggest interest bill to pay on the whole thing. And they can only kick that as far down the road as what they're covered out there as.
Yeah, well, so when we look at it, so TLT, which is the 10-year ETF, right, closed out on December 31st at 148 and change. Okay, I'm just giving you. Let me be exact for all you. 148.19. We're trading at par right now, and we've been, of course, lower, but you can do the math. That's a significant drop in bond prices. So that's what the people who are looking to buy duration right now, they're hoping to catch this wave back. What's it down? 48%?
That's huge.
Well, it's not 48. That's faulty math, but you've lost for sure 30. It's about a third. You lost about a third of your investment. So they're hoping to, and that's, again, these are capital gains and losses. So that's what they're looking for. But if the fissures in the economy start to widen dramatically, do you think the Fed is going to sit there? I'm sorry, I just don't see it. I don't see it, and I'm going to tell you why I keep looking at the debt. And oh, listen, hold on 1 second. You're going to lose my beautiful face for a minute.
I see Tracy's in here, Matt.
Trace, feel free to jump in anytime.
Yeah, let me have a shot from you. It's been a long time.
I'll let somebody else a lot smarter than me talk.
It's a long time since you slapped me, so I'm waiting for it.
Shy Jerem, it's been a long time since you slapped Ira, he said. She was talking about yesterday, we were chatting in Anthony's got this new community that he's building, you know, and there's a bunch of us in there kind of chatting and talking about the event, you know, the new CME event contracts. So we're talking about those, and Tracy was talking about how she had, when she met you in Santelli a few years back, the conversation that you guys had, and it ended with Rick and her doing shots of Fireball.
Huh? What? I'm sorry.
It ended with her and Rick doing shots of Fireball, doing shots of whiskey.
Yeah, it's, you know, it's I'm due for some shots of whiskey. You know what? I need some. Matt, I'm sending you this article right now. You should get it. It's called, and it's from October 13th in the Washington Post. And it's, so the Washington Post gives it credibility because the fact that they would even write about this, with rising rates and rising debt, the taxpayer bill is finally coming due. Yeah, you probably just got it. So this is important, because the cost of financing the US deficit is growing, not arithmetically, but geometrically, by the way, to use Malthusian phrases. There's no question about it. And that's, to me, I don't see great fundamentals for the dollar. You know, and so again, you know, we'll use the shitty Wall Street term, well, we're the cleanest shirt in a dirty basket. Yeah, I know. You know what? It's everybody's got nice phrases because you can fit it into an algo headline reader and put it out there. Dirty, oh, the dollar's good. You know, so whatever. But I just sent you that.
I'm bringing it. I'm trying to try to copy and paste it in here.
Yeah. All right. But that's what there is so, let me tell you this, there's so many landmines out there right now. So everything I do is a trade. I see big things develop, as I talked about with this guy yesterday, Victor Adair. Can I trade him? Not really. Not yet. I'm not seeing it yet. And I always wait for the markets to begin to tell me. That's it. So what do we got from Shy Girl? I could go ahead, give me a whack. I could use it.
Tracy said she'll be in a second. She's got oil inventories coming out in a minute, and then she'll.
Oh, yeah, I'm sorry. That's right. I forgot she is one hell of an. In fact, that's one of the. I know we got one of the heated discussions we had, because that was right after the Saudi king. That's how I remember when we had that. The Saudi king had just gone to Moscow, and I made that into a big deal. So we had a pretty long discussion about that.
As far as something breaking, you know, you'd like to see the Fed. Would you like to see the Fed increase QT, or just continue to continue to unwind the balance sheet at the current pace that they're in?
I would stop. And remember, this is coming from a sound money person. I'm as sound a money person as you're going to find. As I say, I would love gold prices to be at $41. It would tell me more about, well, either the world would be in a massive, no, it can't be in a deflation, because if you got the deflation, gold prices would scream because of what central banks would be forced to do. But I'm a hard money person. I would love to see the Fed, but the Fed can't. They can't, only because the amount of debt that's been piled on the world's books. And the damage it would cause and the force of the liquidation. And as a matter of fact, I tongue in cheek, but when I make tongue in cheeks, it's just because I'm a kid who hung out on a street corner and I'm a wise ass by nature. Is that Jerome Powell is not trying to be Paul Volcker. He's trying to be Andrew Mellon, who was Secretary of Treasury, I believe, under Hoover, whose first response was, to the onset of the financial crisis in 1930 was to say liquidate, liquidate, liquidate. Somebody could Google it, the exact year and date. But Andrew Mellon said, screw everybody, kind of like Santelli as a way by the Tea Party in 2008 and 9, because the Tea Party were basically Calvinists going, hey, you borrowed too much to buy a house you couldn't afford, too bad, suck it up. And anybody who lent to them, too bad, stop bailing everybody out. But there, as I argued with Santelli then, very openly, Rick and I only have productive arguments. We don't have silly arguments and just yell at each other. And we don't yell, we discuss it. But I told Rick, I said, QE was absolutely positive, was a force because you had to prevent the liquidation of the system. Because if you go into liquidation of an asset mode, of a global assets or the whole United States asset class, because everybody's borrowed up too much, well, can the system take 15 to 20 to 25% unemployment? And I'll tell you the answer. I don't even have to think about it. The answer is no. And that was the birth of the Tea Party. And if you don't understand that, ask why I say that. Because you don't just absorb it. That's a big statement, Ira. What kind of asshole are you to say that? Well, telling you why. Debt liquidations. All you do, look outside your window and go look at the merchandise mart and realize that the merchandise mart was bought by Joseph Kennedy for $6 million during mass liquidation, okay?
That's just a terrifying thought.
Well, that's right. And that's why I don't, the strong dollar, I think people are out of their friggin' minds. And I think Yellen has now woken up to it because she actually made some comments that, yes, let me see, Sunday night from Bali, which I've really been on her because she's sleeping through this, but Janet Yellen is really, I think, as an economist, very intelligent. She's a little, and a moral philosopher, and I don't have a problem with that, but she's a terrible politician. And by that, I mean, a really smart person, when they have to get involved with the damn politics, becomes awfully stupid quickly. Because when you're serving too many masters, let me see if I can find the absolute headlines from Sunday night. This is not easy.
My question was actually going to be about Yellen. And I'm here. Sorry, I just had inventories really quick. My question was actually going to be about Yellen. Like, is she nuts for letting this dollar go and, as high as it's gone? And obviously we've seen some swap lines open and we've seen the intervention by the BOJ, but do you think we're going to see, attempts to kind of push this dollar down a little bit since it's crushing emerging markets, or this is just a temporary thing and it's going to bounce back and they're going to let it?
You know what? Well, the rise was, of course, correct. Here. So this is so actually on Sunday night from Bali, we got this. It was on report on Bloomberg. Yellen acknowledges spillovers from U.S. rates, strong U.S. dollar. All right, that was a Sunday night, and it caught my eye because Shy Girl's question is dead right on target. Will she allow it? But that's why I say Yellen has been a very bad politician, because she's bought into this and she knows better. And if you really want to pay attention, the strong dollar, it plays well to the Larry Kudlow idiots who talk about King Dollar. But that's a 1970s analysis as far as I'm concerned. The role of the dollar today, in answer to Shy Girl's question, is totally financial. It's not about trade. because we buy oil, the United States pays for imported oil, but whether the dollar goes up or down makes no difference. The only way it makes a difference is if the dollar rallies and the world is choking on a strong dollar and the entire global economy slows down. Yeah, then we're going to get cheaper oil. But then the question becomes, at what cost? Is there a greater cost than just cheaper oil? But we're not like if the euro rallies from 100 to 110, the Europeans now are paying a lot less for their importing of goods, right? Because they're all priced in dollars. They're not priced in euros, not yet anyway. But your question is, she did raise it and she needs to be more aggressive, but they can't put this together because there's so much dissension amongst the G7. Because don't forget, when this was the last really successful, well, I won't say that. You know, people say, oh, there's been no intervention. Yes, there has been. I can give you the periods. But if we go back to the, of course, the most famous, which was the Plaza Accord, are we going to put together anything like that? No, because you don't have, the world is just a different place. Does the world need a weaker dollar? I would argue vehemently. Is the Fed sleeping on it? I'm not the Fed, because again, this is not the Fed's bailiwick, by the way. And this is what the US, always has to deal with. But Yellen is starting to get concerned about it. So that must mean that the pushback is becoming ever greater, to answer your question. And I think she's been very too lax about dealing with this. But I think there's a lot of people in the administration, in Biden's administration, who've been proud to talk about the strong dollar. But I think it's a false pride, by the way, because you're not really paying attention to the pain and suffering it's causing, and it's causing quite a bit. And it's caused, again, in answer to Shy Girl's question, don't forget, the emerging markets have actually currencies like the Brazilian real since the election of Lula, and the pesos actually, I believe, higher on the year when you think about that. In a year in which the dollar is up quite a bit, let's see, I believe the peso is up or unchanged. Yeah, the peso is actually higher on the year, and that's because their central bank, interest rates in Mexico I think are up to 10% on the overnight rates, if not 9.5. I know they just raised them. So they've had to get ahead of the Fed because they were more worried about inflation while the Fed was still preaching transitory inflation. A lot of the emerging markets were already going, uh-oh, we're seeing things. And because they pay for everything in imported dollars, and not only that, their corporates are borrowed up to their eyeballs in dollars. They've got concerns about their currencies versus the dollar. So Shai's question, I would almost, if I was sitting on the other end of the microphone, I'd say, would you do arrange for this question to be asked ahead of time? Which, no, but so Shai, let's pick up from there. I'm giving you my view. So I think the unequivocal answer is yes. But I think the Treasury is also worried, and the Fed is, that if the dollar starts to come off, they're afraid they're going to lose some of the potential buyers for dollar assets. Now, I don't think that's the case at all, because my question is, when the dollar is at 1/3, and I hate using the indexes, but let's say when the dollar is, but it's just for to simplify things. So if the dollar is at 113 and interest rates, but everybody else is raising their rates, why would I want to buy dollar assets if I think the dollar is vulnerable? Now I can put them on as a hedge, and I can hedge them, but maybe I don't want to do that because the cost of hedging takes so much out of what my potential gain is. Why am I even making the effort? So that's my answer to you.
Awesome. Thank you.
No. It was a great question, but has now the dollar's moved here very quickly. I'll tell you what, this has all taken place, Maddie, since really I did the, I'm not saying I'm the cause and effect of this whatsoever, but I've cautioned, and I've been very careful about, I've told people, don't be long dollars, don't be long dollars. And now I see JP Morgan, what's his name? Bronco, they're today's star at, and he's good. I'm not diminishing him. They've shifted their position. They were bullish dollar, but they're not bullish dollar anymore. So the question, but you got to be careful here, because there are, as Rosenberg and others talk about, it's interest rates. And yes, at times, and I've talked about this ad nauseum, even with Anthony, and certainly with, at times it's interest rates. That's when the world is pretty simple. Interest rate differentials drive a lot of currency, but we're in a much more complicated world right now. And that's because of what the Fed has done. And how high can they afford to let these go? I can't get away from it. It's one of the good things that are really hanging on me is that, and somebody's going to, my dear friend Kevin McCarthy, who's not who's soon to be the Speaker of the House. My friend Kevin McCarthy is far brighter than that. We still talk about many things, and him and I go back and forth on this. What happens, and you better write this down, because it will become a hot button issue, that the interest on the debt is a larger budget item than the defense budget.
Hmm.
And that's not a shrill, I'm not shrill, but it just opens up a shitload of political problems. And they're coming. I'm amazed that nobody is talking about it.
You brought that up before.
Well, when you talk a lot of shit, you get a little redundant at times.
Hey guys, I gotta hop off because I have a spaces coming up in 15 minutes and I need to prepare for it. But I just wanted to thank PAX and thanks Ira. Thank you so much, you guys, for putting this together this morning. And I was glad I got to listen in.
Thanks for your question. A very important question.
Thanks, Trace. I'll be in there. That was I remember a while back I was looking through notes in previous conversations, and we talked about the in the dollar. This is, we're still, the Dixie was still under, still in the 90s, maybe even lower. And we've had this, I don't know, we've had this incredible bear market in one of the things that jumped into my mind when you were talking about the 10-year, being down a third, and NASDAQ also happens to be down about a third. And in my trading career, since I've known you and since I've known Judd, which has been my entire career, the S&P bond spread has been important as
yes,
an indicator, which for years they moved opposite, and then since 18 really kind of everything back and forth. But certainly this year, the big bear market in rates, in bonds, and in the indices has really kind of, skewed everything in a lot of the way that I was trained in looking at the interrelationship of markets.
yeah.
So with this gigantic run up in the dollar, going back to some old notes, there would be I think this is going back to 2018 or 19. We would have the last run up in equities before we saw a gigantic sell-off, something where the Fed finally broke something.
2007, 2008 is a classic example. I mean, we have some really good things to look at here to make trading relevant, by the way, and to be able to sift out all the BS. Because the problem is there's so many news outlets and there's so many people talking, but there's a lot of BS out there.
Oh, there's so much BS out there. There's so much bullshit out there that it's like the point, to your point earlier about the TikTok and all of the other social medias, that where people yell and they beat their chest and they scream, and the louder you scream, the more right people seem to think that you are.
Right.
That further skews, the interrelationship between the markets, and and the way that people see things and take advantage of them.
You know, that's right. That's why you don't get sucked into the traps of it. And that's why, you know, ask questions. And if somebody won't answer, then or if somebody throws something out, you go, that doesn't make any sense. It's like Shy Girl's question was dead right on target. And how often do I haven't heard that asked but I don't even watch television anymore. The only time I put on CNBC is when there's data coming out, or
Yeah, me too.
I have to get as close to instantaneous news as I can. But the markets are so much more efficient than that. But I'm dodging bullshit headlines all day long. And the headlines are empowered because they're written to create volatility. You have to understand that, because, and I've been on this for 20 years, by the way. I've argued with people on the board at the CME about news, and I was told I was full of shit, but I'm not. Every day gets proven to me that that's right. Look at, all you do is have to look at this whole thing with the cryptocurrencies, right?
Oh yeah, FTX.
I was going to circle back to what you said with the interest on the debt is going to be larger than the deficit, or the defense spending.
Right.
And I know you know this, but like, I think a lot of people don't realize this is they're hiding that. They're going to hide that bill in the balance sheet for a lot longer than they're going to hide the defense bill in the balance sheet, the interest bill. And I think it'll, like, I'm totally agree with you on that. My point is that I don't think the general public is going to see that at all.
No, and that's a great point, Jake, because what's going to happen, and this has been my point for years already, and I know we've discussed it in this room, is then political decisions are going to have to be made about discretionary spending. And then you can't hide anymore. Because
it comes out, that's when it cracks.
Especially with the Republicans having the gavel in the House. Now that's not to exonerate the Republicans. You know, Trump, I hated the tax cut in 2017. Not that I didn't think corporate America needed some type of tax. What they needed is really simplification in order to compete better on a global basis, but those ought to be paid for. And I argued that in my blog from day one, that I was opposed to them because they should have been revenue neutral, and they should have raised rates on the highest 10% of taxpayers to pay for it, or found other ways. I was absolutely in for, but it was a cut that needed to be paid for. You know, so the fact that the Trump budget, a tax cut, put $1 trillion more onto the debt to burden, I was not in favor of it. Pay for it or don't bring it forth. But I know Wall Street shared it because that's just what they like to do.
Yeah, and now we got to deal with that.
I will tell you this, and I am a Jew, and I'm a proud Jew, and anybody who knows me, that doesn't mean I can't self-criticize. I do. I criticize. I'm very critical, and I'm not thin-skinned, and I've lived in the world, and I know the world pretty well. And Dave Chappelle is one of my favorite comedians. So when he got blasted the other day, I had to go listen. I listened to it twice. I go, nah, yeah, you're missing the point. Yeah, was I wild about it? Yeah. And does it unleash idiots? Yeah. Mm-hmm. But in that piece is that discussion about Trump. For all those who didn't,
yeah, that was great.
See the piece. That discussion about Trump was quite interesting.
Yes, it was.
And as other people watched it go, and in a very liberal Saturday Night Live audience, people got their throats went a little dry, because Dave Chappelle did as a comedian exactly, you know, when he was talking about that, what did he call it, Trump? It was like the perfect white liar.
Yeah, he was the most honest liar.
Right.
Most honest liar.
And what was he talking about? That yeah, I know the system's rigged. I use it. So, and you know, as he's sitting and looking at Obama and Hillary as Chappelle, the anti-Semitism noise, okay, you know what, I know people's sensitivities, we live in a heightened, but this has been going on for a long time. Nobody gives a shit. Because I have nieces and nephews who've been on college campuses, and I get the full reports. You know what? So it's only what the media wants to tend to feed you. But Chappelle's, that made him, see, I look at Chappelle because he's Black, and that's a statement in itself. He could say whatever the hell he wants.
You can call
And you know
it a spade, where everybody else is afraid to.
Yeah. And when these idiots attack him, like, you know, the gender people, it made him more popular. It's like, he'll tell you, thank you very much. He didn't cower. He made more money than ever. He became, you know, all of a sudden people who weren't paying attention to him. And he's so big now. You think Saturday Night put him on for, you know, he's big. He's big. And now to me, and I'm sorry, Dave, because I have to compare you to successful white comics. I could really say that you're really much more, what's his name, who I love, the Black comedian from this with the terrible drug.
Richard Pryor.
Who? Richard Pryor. Yeah, or Cosby. You can piss on Cosby all you want, but Cosby was a great comedian. I grew up. My brother is a professional comedian. May he rest in peace. Was great. And if you want to go see my brother, go to Dwight Ralphie. That's his .com, and he'll pull up his stuff. Dwight, DW, like Dwight Eisenhower Ralphie, which is a poke at the Screen Actors Guild, because his real name is Ralph Harris, but there's a Black Ralph Harris. And my brother was well established, and they allowed a second one, which you're not supposed to do. They had the exact same name. They wanted him to put it, you have to change it in some way, but they gave way. So my brother said, so his response was, I'm the Dwight, meaning the correct Ralph Harris, Dwight Ralphie. That's before he died. So he was posted all the stuff there. But I grew up with all these comedians, and Chappelle is every bit Pryor, Mort Sahl, Lenny Bruce. He gets at it. It's just that the society we live in, where we used to applaud that and stand up and go, yeah, whack them, whack them, whack them. Now everybody's sensitivities are so great. We protect the individual. Fuck it. That's not what comedians are about. Comedians are supposed to make you feel uncomfortable. And my brother never married. So when we buried him, and I was very close. He was 6 years older than me, but we were very close our whole lives. And when we put a saying on his tombstone, it's not even a tombstone, it's just a grave marker. It says, I had put on there out of because of my great respect for him, was he wore the jester's crown. Huh. And that's a very big statement, because jesters are supposed to dig their way to finding all your uncomfort.
Yeah, and that's exactly what Chappelle does, isn't it?
Chappelle does it so beautiful, right? You know, so when they go after, I go, yeah, you know, because for a lot of people, I'm the clearinghouse of all things Jewish, and they go, what do you think? I go, don't see it. I can't see it. You know what? Yeah, but before he does that, he says some things that were really interesting. And he said, you know, I grew up with a lot of Jews. He says, I know, they used to disappear for Shana Na, as he called it. You know, so he set the table, but he said so much more in there. He's probably angry because he says, this is all you're concentrating on. But the Trump line was phenomenal.
Yeah.
And I think people who have raised that issue, like Gutfeld, you know, that, hey, those mouths went dry, because they had no response to that. I mean, he really, so of course, people, you know, rather than deal with that, and so there's so much going on. That's my, you know, going back to your point, Jake, and there's so much going on. This is a very hard trading period for me, because there is so much going on. And I can see a big thing. And to me, remember, there's two things. I'm a big watcher of the dollar, but the dollar is only emblematic of the concept of, for me, of the global debt situation. I never lose focus on that. That doesn't mean that it's always front and center. Not in any way, shape, or form, but I stay focused on that because all shit in the world happens from debt.
Yeah, 100%.
And if you want to challenge me on it, bring it on. That doesn't mean on a day-to-day, week-to-week. Listen, when it's not, that means the world's pretty quiet and there's a lot of growth going on because growth will paper over a lot of bad debt situations, as you've seen the opposite. As Buffett would say, as the tide goes out, you find out it's swimming naked. Well,
Right.
over the last 9 months, the tide has certainly been going out.
Yeah, and there's a lot more out there than what anybody ever thought. Yeah.
Yeah, absolutely. There are a lot of Costanzas out there in the world. There's balance sheet shrinkage as the tide goes out. We've been swimming naked.
The markets have been very difficult to trade for me too, from an opening range standpoint, even. All the uncertainty and all the uncertainty and the cross currents, all these different cross currents that are out there is even the HFTs have no idea how to price these markets or the algorithms until much later, which is it makes it a lot more difficult to trade, a lot choppier, a lot thinner, a lot whippier.
Oh, yeah, and again, how I always used to talk about it with Anthony all the time about wish orders.
Mm-hmm.
This is the greatest market for it.
Oh, sure.
I'll put in orders like this morning, and then I go take a walk and I get filled. I go, no, I'm not really filled, and I had to look at it. Yeah,
Sure.
I don't rush into any markets now. None. I am very, very cautious and patient. And as I would call him, a Bobby Berland market. Remember Bobby Berland?
Yeah, I do.
Huh?
I do. Holy cow, I do. I haven't heard of his name in a long time.
These are judo markets. You got to use the market's weight against itself. Because that's what I call him. I've talked to Bobby in a while. He went to high school. He was like 3 or 4 years behind me. He used to tell me, "Oh, I thought you were, you guys were great football players. We worshiped you." Yeah. The guy won a silver medal in judo at the 84 Olympics.
I remember that. That guy was great.
It was well, and his two coaches were very good friends of mine growing up. So interesting guys, Stevie Cohn and Irwin. Hated them because they broke up more baseball games because they would have to go to judo.
That's it.
That's
Who
true.
does that?
That's true.
Who did that in the 70s, 60s, and 70s? That's it. I'm done. Grab my ball. I gotta go to judo.
60s, because Irwin's a year older. Steve was 2 years younger than me. But they studied and learned their art at the Uptown Dojo.
No kidding.
Yeah.
There couldn't have been too many of them in those days.
No, but Uptown was right. And they were so diligent. They were, I admired. I asked my mother, I said, I want to take judo. She says, no, you don't have the right disposition. Be too dangerous in your hands. That's my mother. That was my mother telling me when I was 10 years old. I said, no, I want to take judo. She says, no, you're not mature enough to deal with what's gonna be put in your hands. She told me.
That's funny and very insightful.
Well, she was afraid I would take it and use it on my 3 older brothers.
Yeah, that too.
Yeah.
Does anybody have anything that you guys want to jump in with? There's some traders that we've got some new traders in the last month or so since we last spoke. Dorothy Scrapper, Joe, a lot of other traders. Feel free, Greg. Feel free to jump in here before.
Yeah, give us a whack.
There's always so much to talk about, and there's so many things, and it could seem, oftentimes it can seem intimidating, the macro situation.
Don't be intimidated. Ask the questions. You only get so many shots. It's not like I'm not Professor Feynman in any way, but I have pretty good, and as Matt and I have talked about, and I really, my business really should be context.
The nuance.
That's just to get you to understand it, because it's never, as I explained to this guy yesterday, Victor Ader, I said, that's why my tagline is 2 + 2 = 5. And it's not because of what people think that it comes out of 1984 when what's his name really attributes it. That's what totalitarianism, because they'll get you to believe that 2 + 2 = 5 with Winston Smith. No, that's not what I'm talking about. Orwell, it's not what I'm talking about. 2 + 2 = 5 was a line from Dostoevsky's Notes from Underground, in which he says he promotes that because he was railing against the rationalists, what we would call model builders. I always rail against the model builders. Yeah, it's great for aggregating data, but aggregated data by itself does not help you understand what's going on underneath the hood, so to speak.
There's been a lot of talk with Peter Brookvar, who I just love, and Rosenberg in that podcast, and even with Brent Johnson too, was everybody's so bearish long term, going into next year you have recession coming, and I think it was Rosenberg that made the point that in the last GDP, it looked like inflation was starting to come down, which goes into your point about the Fed pausing the rate hikes while continuing to allow QT. Whether or not we're in recession now, which is would appear that we are, or and how deep it's going to get or be, is a question that the market will reveal to us in time. And again, it's about, for us, it's about context and nuance, and about trading the market effectively, and not trading to make money and not to be right, to use that Howard Green tag again. We use it all the time. I always thought it came from you or Judd. I didn't know it came from.
No, it came from Howard. So it's always we're not, as I always say, if I'm right, the market will show me that I'm right.
Right.
I want to do the analysis and understand where I'm wrong or why I'm wrong, and then okay, and that's why I love when this room is full of questions, because I need you to push me. If you don't push me, you're not helping me grow, and I'm not ferreting out. Listen, I'm giving away a lot for free. So what's my give back? My give back's ability to interact, and hopefully somebody will say, hey, idiot, I disagree with you on this. I say, okay, you show me what, okay, I got it. Yeah, thank you. Or, oh, I didn't see that. So when I get questions like that, it pushes me to wonder, And again, it's all about, creating investable and tradable ideas. Everything else is again, as I say, pure nonsense.
Pure nonsense. And there's plenty of that.
Yeah. Otherwise, then we can go sit on, MSNBC. And, I was thinking about it. I said, wow, it's amazing. Because when I used to be on CNBC, people would see me and go, oh, and that gave me a credibility. It didn't matter what I said. Yeah, I'm telling you. But I've always been skeptical. I'm a natural skeptic about the media, because that's the way I approach. It doesn't mean I'm a contrarian. I'm always outside looking in, going, why? Why does that work? I'm the irritant. I'm the pebble in your shoe, going, why? Why? I don't see that at all when I do that. So if I do my job right, I affect other people to say, well, you're a pebble in my shoe. So that's right.
Matt, Kay's iPhone has their hand up. I don't know if they're trying to ask a question or not. If they
all right. Do I need to do anything?
I don't know. I just know enough to be dangerous on here. But if nobody else wants to talk, I was gonna ask Ira what his take on the ags were, if he wanted to go down that road, and if he doesn't, that's okay too.
Nobody has any other questions?
I don't know who that is. Kay, do you have your hand up, or is that just something that your iPhone does? Oh. I'm lucky enough to be able to use the Google machine as you were talking about earlier, Ira, let alone how to work something like this. So Jake has had some great some good positions, and he's caught the S&P rally beautifully from 36.63 all the way from June expiration all the way up here to 39.12. So he's got, you know, he's got the right perspective on everything going on. So I'm sure he's got a lot of questions when it comes to grains and what he thinks is what he sees going on there.
You know, it's amazing though, and Jake, good on you, as we say.
Thank you, Ira.
But when you, and this started again, so the Fed meeting was November 2nd. We haven't talked much about that. And we saw the phenomenal trade that took place because the Fed statement itself was somewhat dovish, right? Especially that one paragraph in there, which I call the Leo Brainerd paragraph. And then Powell completely flipped it during the press conference, and you saw what the markets did. Because the S&Ps originally rallied after the release of the statement, gold rallied, currencies rallied, bonds rallied, and all of a sudden we got into the press conference and the setup was very hawkish. Now, Waller the other day made some interesting comments saying they knew that was it, meaning he probably had talked to, and they set the market up. But by the end of the week, let's see, hold on, let me use the gold as a barometer just for a minute.
Yeah, it wasn't very long, and it was right back to where it was in that Fed meeting when they were doing the press conference, and he turned, or Powell flipped the script a little bit, so to speak. Yeah,
and the high that it made right after the release, I'm looking at the gold, okay? So that's all. So 1673 was that high, and then by the end of the day, it had dropped $55. Okay, but by that Friday, meaning 2 days later, and this is, you remember that the Fed was patting themselves on the back that they had able to crush people's spirits, basically. And yet they're finally getting it, that we're serious about fighting this inflation. But meanwhile, gold had made new highs for the week and closed there, very importantly, by the way. So going into at the end of November 4th, we had made new highs on the week. That caught my eye. The dollar did the same thing, by the way. So with all the hawkishness that everybody attributed, there, let's see. Yeah, so we ran up after Powell backtracked, but we didn't make new lows on the week, but the dollar did close basically, I believe, unchanged, no, lower on the week, unchanged on the week. So that was another tell that something is wrong here. With all this hawkishness, and now we all know this, all the Fed, and all of a sudden, that caught my eye. And then, of course, we know the following week. Now, what didn't happen is that the S&Ps never went and made new highs because, does anybody remember what the high was the day of the
it was around
that same period?
39.12 that day Powell was talking. Yep. And yeah, they didn't make new highs until CPI printed.
Exactly. So it was 39.07 after the FOMC statement on the front month S&P, and gold and the currencies flipped during the week. But as you rightly say, not until the CPI did we go back, and that was what time of the day? Yeah, in the morning did we take out that 07 high, that 39.07 high, right?
Yeah. So is it pay attention to what I'm doing, not what I'm saying, or pay attention to what I'm saying, not what I'm doing?
I don't know, but right now the market's totally shit on him, and he didn't like being shit on.
No, and he wanted to ignore the fact that it was too, or not ignore it, but like
right, yeah, Kashkari, he couldn't, who I have no respect for whatsoever. He's just he's a guy who's in search of a big political spot, whether it's, I mean, that's his game. I can't stand Kashkari because he was dead wrong one way and it'll be dead wrong this way, but he's got a big mouth and he likes to talk.
Yeah, and at the end of the day, he ends up with a position and
Yeah.
he doesn't have to give.
Yeah, and I'm sure he's got 3 or 4 people trading accounts on the floor for him, you know. Sorry to be so cynical, but
Oh, no.
I've earned the right.
I don't think you're cynical. I think you're just realistic, you know. I mean,
It's not hard to see. So that's where, but on the grains, I'm a little flummoxed. Now, this is a hard period always for me in the grains because we've just finished, the US bins are full and we're getting, you know, news out of what's going on in South America. But I'm still bullish overall because I still believe the Chinese need a lot of grain. Now, I'll get more bullish if the Chinese currency would break back down below 680. I think the Chinese would become far more aggressive buyers, 6.80. It's been, the yuan has been an interesting thing because I don't think the Chinese have wanted a weaker currency.
so
That was market forces. But I think overall, I'm still bullish. And that's, you know, the Ukraine situation is just going to be with us and its impact on the market is going to be with us. And I talk in market terms. I'm not talking in humanitarian terms. It's a catastrophe. Every life that dies, everybody who dies after, it's a catastrophe. But
yeah, they're pawns for this political game, which is BS at the end of the day.
yeah, but you know, I'm paid to analyze markets and to do those types of things. So I look at it through those eyes. And
one thing is odd with the grains, and I don't know that you probably see that end of it so much, just, you know, you probably don't look at the actual cash price of it that much, or anyways,
No.
I want to share it with you. Is the odd thing this year is our basis, you know, the difference between Chicago and what the local price is historically high, like higher than it's ever been. Like right out of the field, a lot of times this fall it was 0 basis Chicago or 500 Chicago, when normally that time of year it's you know, 40 or 50 under Chicago. I'm talking on the corn, and the beans were really strong basis too. And it's a really strong basis. You get down to the Panhandle of Texas, Kansas, where they feed a lot of cattle. The river's kind of jacked up for shipping right now. You know, the Mississippi, not much is shipping through there, but it's really odd that we have the futures kind of where they're at, but the cash buyers are saying, we don't care where the futures are at. We want it, and we're gonna, you know, bid up, you know, this much more to buy it.
thank
So,
you. But
yeah, I don't know if that means anything to you, but
it means a lot because I do look at the crush margins, and I know that crushers are making a shitload of money.
yeah, I mean they're pushing. Well, they're the ones that are setting the basis, you know, because
Right.
they-
And I
they
know,
want it, whatever it costs, you know, or
Yeah.
whatever more they got to pay for it.
yeah, and I know that, you know, prices are still high. What's it at the Dalian exchange in China?
Yeah,
The margins are big. That's why I think the Chinese will buy everything if the yuan were to go higher. They're not going to force it because you know what? It's really tough when you play in an intervention market. The Japs have done it, but the Japs have an uncanny ability because they could do what really they want because their massive capital flows at any time are enormous. From their pension funds to the BOJ, they have ability when they want to. Now, you know, I keep coming back to Louis Gavay, and I think that the weak yen is something to watch here, where everybody's talking, yeah, listen, I'm not enamored at all with the BOJ, but Japan has such massive foreign investment all over the world. I mean, they can move the yen whenever they want, whatever way they want. And the question, and Julian Bridgen and I discussed it, and Bookvar and I've discussed it. And I come always back to Louis Gavay. What is the purpose of the yen? And the yen is really weak. I mean, the yen is weak against the friggin' euro, for God's sake,
right.
Which is a real problem. But is the weak yen, as Louis Gavay and I talked about probably 7 months ago on a podcast.
That was a great conversation.
Lewis raised the issue that the weak yen was being used to drive the Europeans out of China.
Ooh.
Yeah, that's right.
And you have to think through that. That's a very powerful statement. So I built on that when I was talking with, I think with Bookvar, that does the weak yen, because don't forget, the Japanese are masters manufacturers, but they've had a lot of their industry howled out like the United States did, because when the dollar was strong in the 80s, and the strong dollar now is going to do damage to the reshoring, by the way, which is another reason why the peso is hanging up so well. You know, Mexico is, as I always compare them to the Palestinians, they never miss an opportunity to miss an opportunity because of the corruption that overhangs that system. And I was hoping, always hoping that AMLO was going to be able to, through his leftist tendencies, but he had market sensibilities, was going to be able to help finally stamp on the throat of some of these just terrible actors within Mexican society. But he hasn't been so much. But there is a phenomenal amount of money pouring into Mexico. And I know from somebody who builds plants there, that's his business consulting. He was doing it in China. And I talked to him. He said, and I had told him this 3 years ago. And he says, you can't believe how much business, you know, that because people are trying to shorten their supply lines. So Mexico has definitely benefited from that. Again, so many things in the discussion, but on the grains, if the yuan were to rally, I think you would see massive amounts of Chinese buying, even going into Brazilian harvest.
Yep. Okay. Well, I appreciate your insight on that. And like I said, too, I just wanted to share whatever I could share.
I appreciate it.
What I can. And it's always a pleasure to talk to you, Ira. We look forward to.
Yeah, thanks. You know, Maddie, we can do more of these,
Yeah,
but don't be afraid to ask the questions that need to be asked. But as you saw, the dollar and the S&Ps basically last week almost performed to the T, right? They both moved 5 or 6%.
It was amazing.
But that's only because a strong dollar leads to tightening global financial conditions. That's the formula.
That's something to write down. There's a Christopher who's from Poland is a question about Polish currency relative to the strength in the dollar, or maybe weakness lately. But with the situation in Poland and the Ukraine, you know, and how do you see that? You know, what happened yesterday?
Well, first of all, nothing happened yesterday. It really appeared the United States got out in front of us really quickly, and it looks like it was the Ukrainians firing at some Russian missiles whose missiles hit Poland. Again, this is a problem with and I'm not to make light of the 2 people who died. Again, I'm not. So don't infer that. That's not what you're asking me. And we're not discussing the geopolitical ramifications. We're not discussing the military ramifications as of yet. So really, nothing has happened there yet. I was more interested this week. I'm sorry, what's your
Christopher, yeah.
Christopher, there was a column, late last week. It was late last week on a very important topic for me, but it was the big read in the FT talking about the Polish banks still reeling from the effects of what we talked about earlier with the Swiss bank back in 2015, when so many Polish people, as well as Hungarian and Czech, had borrowed because their banks directed them that way to borrow. They wrote their mortgages and other borrowing in Swiss francs because the Swiss had pegged the euro to the Swiss at 120, and they weren't going to let it break, right? So there were massive. If you're borrowed in Swiss, you're basically short Swiss until you pay off the loan, because you have to keep generating Swiss francs or finding Swiss francs somewhere. So when the Swiss exploded, when they finally removed the peg in January of 2015, the blood in the Eastern Europe was phenomenal. And if the lawsuits are still going on, so all of a sudden, here I am discussing this, and as I said earlier in this discussion, Larry Summers even brought it up because this was a very important issue for me when it happened. And I can tell you this, where everybody said, and I'm going to take a bow, where everybody said that, oh, the peg will never break. A week before it broke, I was on with Santelli, so I can verify everything, or you can go back and read my blog because I posted the clip there, said that I could see that from all the pressure and all the intervention that was needed to hold the peg, that the peg was going to break, and a week later it broke. And I got really pissed at Sarah Eisen because she, oh, nobody saw this. I said, yeah, if you, and I was sad because I was on with Santelli because we were talking about it. And she said, well, nobody saw that. I said, yeah, if you bothered listening to what anybody said besides yourself, you might have heard that. You know, it's one of the reasons that that Santelli was the only one who would eventually have me on CNBC because I didn't mind going, you know, the old saying used to be, you don't go to war with people who buy ink by the barrel. Well, again, I grew up on a street corner being a wise ass. Yeah, I'll get, if I'm right, I'll go to, you can buy all the ink you want. I don't care. Doesn't make you right. Just means you have a bigger megaphone. But so I don't see much coming out of there. I'm still amazed at all the damage that's still in the Polish banking system. So what else did I miss? And the fallout from the Ukraine, it's going to be way long before we know how this all plays out. Because, you know, Russia is a major energy provider to the world. And you're not going to replace them with windmills and you could with nuclear power plants, but that's you've already walked away from that, and to walk back into that is a long, arduous process. I mean, it'll do some of it, but you need you know, there's a transition period here. And I don't know whether it's 5, 10, 15, 20 years, but and Russia's a big part of it. Yeah. So how is it going to play out? I don't know. But what else can I?
Fossey had something. Chris Voss was a clerk in the NASDAQ when I first started trading. He had a question that I think we had talked about earlier, but what is more relevant in your opinion, what is more relevant, quantitative tightening versus short end rate hikes and their significance on inflation and the economy?
Different times at different junctures. I would say right now, quantitative tightening on its own would act to undo a lot of leverage in the system, but you got to let it work. The two of them together, maybe at the beginning, I think it's too much. You know, as I said, and I was very open about it, I would have raised rates 15, 16 months ago to 2 to 2.5%, stopped there and let quantitative tightening. But they were still, don't forget, we didn't stop quantitative easing, meaning purchasing of bonds by the Fed and other central until March of 2022. I think the quantitative tightening, because it will act far greater, have a far greater impact because it's a reduction of liquidity in the system and the amount of leverage. So I would say right now you could stop raising rates. All right, you want to do one more little one just to, you know, to show you're the biggest dick in town? Fine. Quantitative tightening. And I would say to the market, we're stopping now, we're really letting the quantitative tightening take place, and we'll wait and see. But they're always in such a hurry. So I would say that's just one person's opinion.
Do you guys have any follow-ups to those? Anybody else have anything that you want to add? We've got a really good group of traders in here, Ira, you know, some real talent, some and I don't think that there's anybody that's finding the current trading situation or the current trading environment easy. The move after Fed going into CPI, going into PPI has been, you know, tradable, but the in between those big economic events, there was just a whole lot of nothing, you know, so it becomes like you said, it becomes the judo trade, you know, and just being patient and kind of waiting, just letting the market kind of start to become more obvious and let that price action dictate to us what our trading is going to be. But it helps me a great deal to be able to put the market, not just the market, but geopolitical events into context, and to be able to understand the nuance of them, as you say all the time, context and nuance, so that I can take effective action in the markets, or not. Effective action being, you know, increasing my size, decreasing my size, or not trading at all.
Listen, we, you know, and Jake caught it. So the equity markets, the metals markets, the currency market, I feel very comfortable. I mean, with my analysis with Rosenberg and Bookvar and the moves we got off it. Now, does that mean that it's going to be sustained right now? No, I'm looking to see where we go from here. Well, we've had a hell of a correction in a very short period, which shows you the power of algorithmic money. It's not just a headline readers, it's just the money pushes it. So when you unwind some of that momentum that's been, you know, the persistent dollar rally has been unbelievable. You know, it's made me cautious. It's made me very cautious. But again, and when you don't delay and tarry in coming back to me, because you have to look at this in relationship, I think, to the second half of the year of 2018, especially the fourth quarter of 2018. I think from a technical standpoint, I think there's so much going on there that we have to pay attention to it. Look at the damage we got going back to just a missile falling at the Polish-Ukrainian border, right?
Yeah.
I mean, think about what you saw yesterday. So the ability for headline events to wreak havoc on anything that you're thinking and doing is something you have to stay attentive to.
And stay away from.
Well, you can, you know what, if you've got some good levels, you say, okay, I'm willing to make a risk play here. Okay. Because you're going to see levels that are just friggin' unbelievable.
Oh, sure.
Nah, you're shitting me. There's no way that we're here. Oh yeah, we're here.
Did that yesterday, but it was, you know, if that could have turned very quickly and could have been bad. We could have had a huge move to the downside. We live in perilous times, scary things going on.
Yeah. And if you don't respect it, yeah, you may have one good that they'll carry your sorry ass out.
And they will. Well, thank you for your time, Ira.
Oh, you know, man, I'm sorry for the loss of your father-in-law.
Yes.
Mother-in-law?
Father-in-law.
Father-in-law. Oh, the handsome man. Yes, the handsome man.
The good-looking Greek.
Tell your wife I'll send her pictures of Nikki and Jimmy.
I will. Well, that's all she needs is just more good-looking Greeks in her life.
Yeah. I'm telling you, I can't believe she doesn't know. They're such great human beings. Two of my favorite guys. We always laugh. Well, last time I called him, Nikki says to me, "Who died?" I said, "Shut the fuck up. Nobody died. I'm calling you about business."
I know that my father-in-law knew them because he had always.
He had to know. You didn't live there without knowing that group.
He always asked about Chris.
All right, I'm going to go. My wife is here. We're going to talk.
All right. Thank you again for your time. I'll talk to you next time.
All right.
All right, everybody. I'll see us back in Discord. It was a great conversation with Ira. I'm so appreciative of him coming in and spending his time with us. Ira brings so much to the conversation, obviously, and we haven't spoken to him in a month or so. So it's been, there's a lot that has happened between the Fed and economic numbers and geopolitical events and all kinds of things. The dollar is not something the dollar relationship to the global markets is not something that I even pretend to understand a little bit. I understand rates a lot more than I do dollars. So when I listen to Rosenberg talk or Peter Bookvar talk about or Ira talk about rates, that's something that computes to me. And I said that earlier because it's what I was taught, as a young trader, was to pay attention to the relationship between interest rates and the indices. And it's something that Ira is the one that's responsible for teaching me that, going back into the 90s when I started trading. Anyway, I got to know him, by people telling me on the trading floor what what a great trader he was and how smart he was. And so I would start to say hello to him in the morning. That's something that I don't understand how any of you guys, like we've got a small intimate group, and I like that our group is small and intimate. I don't want every schmuck on the internet here. I get people that complain about the stupidest things like this morning. The point though is that our intimate small group is discovering who's real and what's real and how to take advantage of all of that. I don't know how you guys have done that before you came into this group. How do you find somebody like Ira? How do you find somebody like me? How do you find somebody like Jake? How do you find people that are real, that are actively doing this? And as Ira talks about, eating what he cooks. So with that, I'll see you guys all back in Discord in a minute. There's nothing to trade here unless you're short, and we'll check our positions when we get back. So great conversation, everybody. I'll see you in a minute.